A very good afternoon to you traders. It's Mark here from the Day Trading Room. The time is 22:02 London time on a Monday afternoon. We've got about 50 minutes until the market opens. So I'm just getting prepared for that and reviewing, reviewing again Friday's trades. Now Friday was a losing day for me. Not by much. It started out, first couple of trades, I was about two-thirds of what I made on Thursday, and by the end of the day with the last little trade, it was about half of Thursday's gain. So really, in the scheme of things, meaningless. But I like to review losing days. They don't happen to me very often, and I think, but it's a meaningless metric in terms of how many winning days you have in a row before you have a losing day. It just sounds good when you say I've had so many winning days in a row, but really, for a professional trader, it doesn't matter as long as the losing day isn't doing any significant damage, which is not. Then there's no need to panic, and as long as they're not too frequent, which they're not, there's no need to panic. But still, at the same time, review what went wrong. What could you have done better, and learn, and then the losing days will become less frequent and they'll become less dramatic, and that's the way it is. So yeah, nothing to really worry about. Just reviewing the trades, and you'll see what I actually got up to. Really, it was over eagerness and a slight misread at the open. So I'll go through that, and then the other two trades were fine. But by then I'd scaled down size and was trading it like that, rather than trading it in a revenge mode, which is the most dangerous way you can trade ever. Accept it, move on. There's always the next week. So really, this opening drive here, let's get the drawing pen out. Opening drive here. It was weak. It was a weak open. I thought we were going to. One of my hypotheses was perhaps a little pullback and then a drive lower. Keep an eye on the ticks. But the drive was quite strong, and that's what caught me out. I shorted here, and actually the tape was funny, because you'd often have a tape seller coming in, but then a larger buyer would overcome him, so you'd be scrabbling to get out quickly. It would be that odd sort of action. The fact that ticks was still negative, I was assuming we were going to get a little sort of push up and then a drive lower. That's what I was positioning for, or trying to position for. So first attempt was just, we popped over that range fill. The dotted red is the prior day's low. Just popped above that and didn't even have a chance to take a scale on that. Bang, straight out, full stop. Okay, fine. I'm allowed another one if you like. Part of my risk plan says okay, another one. It popped up again. I thought, okay, this is still on, still potentially a short on the cards, especially when we got that little wick there. Ticks went back to zero. I thought, okay, that's what I should have waited for. Took the short, went against me, not quite stopped me out, came back. I thought, oh, this isn't looking great. Came up, and then bang, I ended up taking it out as we revisited up there. So not a full stop, but almost not quite a scratch, but in between the two. So two pretty unpleasant losers, really. So I stepped back, and actually I was looking for one more trade. I was still looking for the short. I thought, okay, I'll let this one come to you. I wanted 1,000 ticks, and I wanted to see the gap fill on the Dow, which was about another 40 odd points, or 1,000 ticks. So either of those, I would have taken a smaller position, because you've got to say to yourself, hey, I've been wrong twice in a row. Is this a misread? If it's a misread, don't do any more damage. Step back, reduce the position size. We can always increase the position size again once you've proven you're back in tune, but there's no point chipping away with your full position size, doing dramatic damage. I want to save some bullets, and in terms of bullets, I mean total daily risk. I want to save some of that for perhaps a trade later in the day. I don't want to be completely stopped out of my trading by 3 or 4 silly trades. So that was the way I was looking at it. So okay, wrong, down on so far, let's just take a step back. Anyway, I was looking for the short here, and this was a horrible little top, really. Very difficult to read. I felt, I mean, some guys probably got on it perfectly, but I was looking for that 1,000 ticks, and I would have taken it if we'd have got a sort of wick action there and back down, because that was my hypothesis. The hypothesis was that this drive was a bit fake, and that we were going to do some sort of pullback, but the timing was just wrong, which means nothing at the end of the day. That's what trading's about. Trading is about timing. It's all very well saying, oh, I told you gold was going up, or whatever, and years later you're right. It's all about timing when you're trading. So sat back, didn't get involved in a lot of that. Then saw this strength, and this was just choppy. It was a vicious move. Good strength up here, and then you get a pullback, aggressive pullback, and then it would pop on again. And so I was just waiting. Then when I saw this hold and then push again, and then this start to hold here, I thought, okay, I'll take a small long here for the YM gap fill. And you can see how out of sync my trading was because I was so eager to get the scales off. So I took my first scale off, and I didn't let the second scale mature to my target, and even the third scale I took a whole lot off there. That sort of tells you a few alarm bells. You're saying, okay, you're on the right, you've got the right idea, but for whatever reason, you're slightly out of sync with the market. And what do you do when that's happening? Is take a step back. Take a step back, walk away if you need to, or just take a step back in terms of no more trades with real money. There is no point in risking hard-earned capital if you are not 100% in tune with the market rhythm and movement, or if you're trading stocks, the stock rhythm movement, whatever it may be. There is no point. There are days when you are in tune and you are just doing everything right. That's the time to squeeze hard, to push the pedal to the floor. And there were days like that for me last week and the week before, when we had loads of action, loads of opportunities, trading well, trading aggressively, but trading aggressively when I was in tune with the market. That's very important. So out of tune, take a step back. So I'm down the day so far. I'm about 2/3. I've lost 2/3 of what I gained the day before. Again, pretty useless metric, but a little bit more important than how many days, winning days in a row, winning streak if you like. That's less important, but it's slightly valid. I think that you make sure you're not losing more than your prior day's gains or prior couple of days gains, depending on how you manage your risk. So then we just chopped around, and one more trade for me, but I dialed down the size right down here. I'd accepted the losing day if you like. I'd accepted, okay, it's fine. I'm not unhappy with that at all. Obviously would prefer it to be a winning day, of course I would, but realised what I'd done early on, didn't want to dig any bigger hole. Coming up to the weekend, great week, let's not damage the week anymore. We've done a little bit of damage, but it's no issue. So in the end, towards the end of the day, I was trading this last setup, but very lightly, almost to keep my eye in. And if it had taken a stop out, it would have been meaningless. And in fact, even the profit wasn't really. It didn't take a chunk off, but it brought it back. I just waited to see this. I wanted to see these ticks weren't holding firm. When I saw that starting to pull back there, waiting for this to just pull back up, got a little pull back up, took the short, and then I was all out as we pushed back into that low. So yeah, okay, trade, nice enough read, but as I say, size was small, so didn't really recover the day, just pulled back a little bit. So what is there to learn from that day? Really, it's the same old story, guys. It's the case of making sure the risk is managed, accepting that you are going to have losing trades, and then if the signals are still telling you that you're not in tune with the market, if you're not trading well, then stay out, go to a simulator, reduce your size, whatever you need to do to preserve that capital. I know as much as human nature says we want to get it back, if you like, it doesn't make any sense logically to try and do that. It makes sense just to forget about it, and if you need to have a whole day free to forget about it and move to the next week, then fine, whatever you need to do to start again, to trade well, to put it behind you, and move on. And if you're continually out of sync with the market, continually making losing trades, then don't let that frustration overwhelm you. If you are getting frustrated by it, again, step back, reevaluate, reapproach, see what went wrong, see what you did wrong. It was obvious to me what I did wrong here. I was just too early on the move. I didn't let it stretch enough. I didn't take into account the fact that the opening drives are so vicious. I let the ticks guide me too much. They're a great tool, don't get me wrong. I'm never going to stop. Well, never say never. I'll go with whatever's working and develop my own strategy, but at the moment they're working great. But perhaps put a little bit too much bias on them and not enough on the price action. And possibly if I'd have been looking at the price action a little bit more clear and less concerned about getting on that short side, I'd have let this run on and perhaps taken a long on that first pull back there, and then perhaps waited it all out, maybe taken a short here. I don't know, but a little bit too clouded with my judgment there. And actually, looking back on a couple of videos, it was a similar mistake I made a while ago. as I say, nothing too damaging, but it's worth something that I'm going to start to improve on, look to improve on. But at the end of the day, you're taking risk. That's the way it is as traders. We're going to get it wrong from time to time. As long as you don't let it damage you severely, you can get it wrong and wrong and wrong, and then right. That's absolutely fine. Absolutely fine. So yeah, please manage your risk, guys. Good trading as always. Take care out there. Use those stops. At least have a catastrophe stop in. At least, if you don't like using stops based on the trade premise, at least have something stop at your daily risk limit, so that if something happens, you're not stuck in a trade. Think of a way of managing the risk sensibly. So that's all I've got for you today, guys. Hope you have a great week. I may be light with the videos, perhaps one more this week. I'm planning on just trading light this week, depending if the market allows me to. Taking a few days break, or maybe some half days break here and there, so I might be quite light with the videos, and also in the room. I'll be in and out of the room occasionally. So yeah, good trading this week, guys. Take care, take it easy, manage your risk and all those good things, and we'll be back with another video shortly.